I can't wait. I can't wait myself, even from the last time we spoke. Because the first time, you didn't have the indicators.
Oh, I had to try to teach 5 years of knowledge and break it down. And it's a lot of knowledge. Now the indicators make it so simple. Like,
Right. This is my trading view account right here.
right? It's perfect. Now go to hit the K in the corner, the top left corner. All right. Now we're gonna get the indicator set up and we're gonna fix your charts because right now your charts are they're not gonna work with the indicators because the colors are red and green. So you're not gonna be able to see the signal bars, you know. So go you see the settings wheel to the right side, take your mouse and scroll across to the right. It's a settings icon right there.
All the way to the right.
Mm-hmm.
This little thing right here. Okay, right there. Chart settings.
Yep.
Mm-hmm.
You go to the settings wheel. And then from there, pull it up on mine. So the first box, the green box right there, you want to change that color to white. The second box right next to it, you want to change that color to black. Now below it, that green box below, you want to change that to black. The red box next to it, you want to change to black. The box below it, the green box, change to black also. And the red box goes to black also. All right, now that's perfect. Now you want to go to canvas where it says canvas to the left. It says
Canvas.
yeah,
Canvas.
canvas. Now you click that button right there and solid color background. Yeah, that's perfect. Where it says grid lines, vertical and horizontal. You want to click that and then put none. After that's done, you see the next step. I'm going to my settings.
This crosshair, watermark.
Yeah, that's all. That's all perfect. Crosshair is the next one. So actually, you want to change that to black. The color of that, change it to black.
There's like a little three little dots right here.
And then the three dots, change that three dots to a solid line.
Okay, solid. Okay.
Now, I'm pulling up my settings right now just to make sure that you got everything set. Go to status line to the top left. No, trading. Underneath canvas where you clicked before, it says trading. Now you see where it says buy sell buttons, click that. And yeah. Now
It's blank right now.
that's perfect. Now where it says status line.
Status line. So just leave that like that. Okay. Status line.
Yeah. Status line where it says OHLC values.
Yes.
Want to take that off. And where it says bar change values, take that off. And then where it says open market status, you can take that off. Where it says title description, click the description button. And then click ticker. And the final change should be where it says no, that's all good. That's all good. Okay, in the bottom left corner where it says template, it's a down arrow.
Bottom left.
Yeah. Put that down arrow right there
Template.
and save as.
Save as.
And
This
you
is
want to name
theme
that.
name.
I call it newspaper. You can just type in newspaper.
Newspaper.
Yeah, that's what I name that theme. The reason why I name it newspaper is because you want to keep your charts as like standard and bland as a newspaper. So you're just there for the facts and details. There's no green and red, so it's just newspaper.
Okay. It's save, obviously.
Yep, save.
Mm-hmm.
And when you're done with that, hit OK. All right, now in the top left corner where it says volume, VOL, underneath gold, yeah, right there, down a little bit, down 2 lines. Click on the X button. All right, perfect. Now the next thing we want to do is hit refresh.
Refresh right here.
Yep. Refresh. Reload. All right, now right click on that screen.
Right click anywhere.
Yeah, right there. And then scroll down where it says color theme
Color theme.
and hit newspaper. So now always you have it saved. Now go to volume and X out the volume again. That volume, take that off because that's all confusing indicator. All right. So now we want to access the indicators. So go to indicators up top. You gotta go up and to the right. Right.
Okay.
Yep. Click that. And click invite only at the bottom left side of that screen.
By only scripts.
Yep. All right. The first one we want to do is the signal bars. Yeah.
Okay.
Click that. And after you click that, you can X that screen out real quick. No, not the whole screen. X out to the top, right.
Right there.
Yeah.
Okay.
Now go to the signal bar indicator and to the left. No, underneath gold.
Okay.
Down. Now it says a settings icon. Click the settings icon right there. It's gonna allow you to edit it. Now where it says size of signal bar, change that to 1. All right, that's perfect.
You put OK?
Yep. So now everything's perfect there. On the right side of your screen where it shows that history, hit X, move the mouse all the way to your right side of your screen. More down a little, right there. Click that. Yeah. No, to the right. Yeah, click that. All right, perfect. It's gonna now focus on it here. The next thing you're gonna want to do is so this indicator is fully set up. I want to break down this indicator too. But basically the way you want to use this indicator is the black and white bars, they represent bars where there's not a lot of price action to trade off of. So those bars I consider trading range bars. Like when you see a white or black bar, the price is indecisive, and those are not good bars to enter a trade on.
Right.
When you see the red and green bar,
the black and the white are not good.
Yeah, they're no good. Those are noise. I don't want to call it noise because every bar means something. But those are bars that confuse a lot of traders when traders take trades on those bars. So those bars are just trading range bars. When you see that thing trading range, the price is indecisive. It can go either way from there.
Okay.
Now, where the price starts getting a little bit more interesting is when you start seeing multiple green bars pile up, then you know the bulls are coming in. So for example, right there, those last 20 bars or so, you see it was black or white. And then now it's starting to see more green bars, and then price started to move up, move to the left more. To go to the left more.
Green. Yeah.
Yeah.
Mhm.
And I'm gonna show you from my screen. And then the price started to move up.
Mhm.
But if you look at if you look at the whole screen, the price has moved down from the beginning of the screen to the end. So that would represent we're in a downtrend.
Yeah. Yeah. From here, yeah, all the way to here. Hmm.
The price is lower from all the information you have. So now it's safe to assume that the price is in a downtrend. So when price is in a downtrend like that, you want to be careful. You don't want to really take too much buys. So you want to just stay patient and look for a good selling opportunity or a selling bar and take a
Hmm.
sell. So we saw those green bars, but we still believe it's in a downtrend. So we don't take the buys there because we only follow the trend. So if you want to follow the trend, what you would do is when you see that red bar up there, you would take a sell there or the red bar
Hmm.
right next to it. So either those two red bars are good sell bars with a
Hmm.
tight stop loss. So
Right.
I'm gonna go into I want to share my screen, but I
Hmm.
also want to set up the other indicators first. So let's set up the other indicators first.
Okay.
So now go back to indicators in the top
Hmm.
and click EMAs, the first one. Now we're gonna set that up.
It's out or not?
Um,
Okay.
yeah,
It's out.
and then exit out. You can exit out.
Mhm.
All right, perfect. So
But now
you
you see the down
mhm.
trend
and
follow
you
the
see
red. Mhm.
and you see the switch over. So that red line right there, that big red line, that's gonna
Mhm.
represent
This one
that's
right
gonna
here.
represent your trend.
Okay.
So you see downtrends, prices trending downward. So we're respected and we're seeing lower lows. Right now the price is above that bar. So that it could be the start of an uptrend. We started seeing more green bars. It went above it. So now it's safe to assume that okay, the bulls are fighting to take over control of this market. Will they get control? It's highly unlikely because the price right now is looking, it's going to go right back below the red line. So if that price goes below that red line, you can take your sell.
Now, when you say the price, where is the price?
So you see, the price right now is at 2069. You see the dotted line?
2069. Yeah,
So that represents the price right now.
like 2069.12.
That's the moving price. So that, as that moves, that represents the price. And as we know from the other indicator, we were looking for sells without even the EMAs. We were like, okay, safe to say it's a downtrend. We would have took a sell at that red bar or this red bar, we would have been in a sell right here, and we would be taking a sell downward. But before we start taking a trade, I want to just go into more detail about the indicators. So when you see a downtrend like this, what you want to do is if you're above the EMA line, but it's a downtrend, that means price is a little bit confused. So you're going to see a lot of wicks like you're seeing right now. And you're going to see a fight between the buyers and the sellers to control price. The buyers want to push the price up. The sellers want to push it down. So when you enter a trade in these type of areas, you're entering a trade with 50-50 probability. The probabilities of hitting this trade is going to be 50 to 60% because of the position of the candles. Whereas if you trade a red bar below, like you can't see my mouse, but if you look at the red bars that are below the red line, if you go to the
The red
left,
ones that are below the red line, there's like this one right here.
no, that's above it. So
Okay.
go to the
Oh,
left.
above this.
Yeah, go to the left
Hmm. Hmm.
until you see a red bar. So yeah, right there, you see some red bars right there. It's a
Hmm.
red
There's one
signal bar.
here. There's a
Yeah.
couple right here.
So those red bars that are below the red line are safe to enter on sells. You can take a sell there, you can take a sell there, you can take a sell there. The
Right
last
there,
one you
right
can even take a sell and it went below it with a stop loss.
there.
So those are safe bars to enter on sells when it's below. The safe bar to enter on buy is when the price is above the green line, above the red line, and you see a green bar.
Mm. And
So
now this is all in real time?
this is all real-time trading. So as the bars form, once the bar closes, it'll change. It determines the color. It determines if it's a good bar or if it's a bar that you should not take a trade on, like a white or black bar.
Oh, really? Okay.
Yeah.
And I should take it at that time when it either turns the red or the green?
Yeah, you should wait for the close of the bar. Wait for the bar to close and the next bar to start, and then you should trade off the previous bar and how that bar looked.
Okay.
So
Okay. But you're going to be able to show me that in Henko trade tonight?
we're gonna show you
Okay.
that Hingo trade. I'm gonna put it all together. So this is
Okay.
like this is how the signal bar is built on top of the EMAs. And I dropped I'm gonna release a video on signal bars that I just recorded too, but I just gave you the gist of it. Like and I'm in that video I go more in detail, but the signal bars show you good entry points where to enter. It gives you the signal, and this helps you determine the trend because as a
Okay.
trader, and this is taking like 5 years of trading knowledge and bringing it out to simple indicators. This is a very simple plan. I'm very excited for it. That's why I'm excited to teach you right now because I feel like you're gonna be able to crush it in the market just knowing this.
If that changes colors, that's like amazing. Like
Yeah,
the color changes, that's a game changer.
yeah. It takes complex knowledge and makes it like super simplified. So I'm excited. I'm excited to even go farther. So you see the EMAs. I'll go more into detail on it
And
right
now again,
now.
what does EMA stand for?
EMA stands for moving average, exponential moving average. So it's the average price across the last 20 or 100 bars. So that's just the average price across the
Okay.
last 200 bars, and each bar represents a certain amount. So you want to know the average price is important because we trade off a price action.
Okay. So basically that's the average price, the EMA
Yeah.
stands for.
Because what trading is basically a group of people trying to find a fair price for an item, whether the item be gold, Bitcoin, or even on eBay or auction or something. It's just people trying to
Mhm.
find a fair price for this item.
Right.
So the buyers, like, if the buyers think it's not a fair price, they won't buy anymore and they'll wait for the price to go down. If the buyers think the price is a good sell, they'll buy it and the price will go up. If the sellers don't think it's a fair price, they won't sell. They'll wait for the price to go up and sell at a better price. And when the price is fair, it just goes sideways. When they
And
find a
that's
fair
when
price.
it's tricky. You can't really
Mhm.
sideways. It's you don't
Yeah.
really want to do it when it's sideways. You want it to be going either up or down.
Yeah. The market's at a standstill until a piece of news comes out or something like, oh, inflation rates go up or something. A piece of news comes out and then it makes the price unfair again. So
Okay.
that's pretty much what we're watching the market, and these indicators help track. So you see we're in a downtrend and the price is kind of in a 50-50 moment. It's above the EMA, but it's in a downtrend. So as a trader right here, I wouldn't even I wouldn't place a trade. If I did place a trade, it would be that sell over there that we saw. But
Hmm.
even that sell is like you would be in profit. If you took the first red candle, right,
Hmm.
move to the left right there, if you took that first red candle, the one right over next to it. Yeah, if you took that red candle, you would be in profit. And you can make a good amount of money on that candle. Just on that one drop, you can make a lot of money.
Hmm.
However, it's not able to go below the red line. It's having trouble going below it. It's having trouble
Going
breaking that
below this
line.
red line right here. Hmm.
Yeah. So
Okay.
as soon as it breaks that line, it's gonna drop sharply. And it's looking like it's gonna break it out. So
Right here.
yeah.
Hmm.
So I wouldn't take a buy right here because
Now it just went black. The red went away.
yeah. So you gotta wait for the candle to completely close because
Okay.
sometimes they do that. Like the price may think it's a still and then it'll go back, and this tricks traders. This is how they trap a lot of people. That's why you wait for the candle to completely close, and if it closes as a red candle, then you have a good entry. But you gotta wait for the 5 minute. You see the timer right there underneath the price. It says 11 seconds, 10 seconds, 9, 8.
9. Hmm.
That's gonna tell you the time of the candle close.
That's going to tell you. Okay. Now I see the red one is back.
And now the
That's,
candles, see it
okay.
didn't close red.
Also, it's 5 minutes.
hmm
Well, I
Since
mean,
you're in a
okay.
5 minute chart, And you can change the time frame of your chart. So say you want to sit in a trade for 4 hours, you can catch a 4 hour candle that's turning red and just you exit after 4 hours. So this is the 5 minute chart. So this, you'll be in a trade for at least 15 minutes to 30 minutes, and then you'll be done. You're done with trading for the day. You can make a lot of money in these small moves. You make a lot of money because you don't need a big move. You just need a high probability move. And these are all high probability moves. So right now, the price is having trouble falling below the red line. So then you can either sit through that in your sell because you see the downtrend, you saw the red candle, so you can sit through that, or you can just wait for a better opportunity. You have either choice, but as long as you're not risking 100% of your account, you'll be perfectly fine.
Now, this is the line that we're referring to right here, correct?
The red line. Oh, the price line or the red line?
What does that line represent right there?
That's the price line.
That's the price. Okay. Yeah. Okay.
So that keeps track of the price for you. And that red line determines the strength of the trend.
This one right here.
Yep.
Okay.
The other lines, the other multicolored lines, those are smaller trend lines. And when you see them folding and bending and about to cross, you know we're about to go down again. So, for example, if you move the mouse to the left right now, all the way to the left, where the previous high was. So go back where the price was above the red line before. Go back farther, farther, left, 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 even more, like the middle of the screen almost.
Okay.
All right. So you see over there, right there, those lines did the same thing as doing now, and then it crossed that purple line, crossed the red line. Once that purple line crossed the red line, the price shot down.
Okay.
And every
time that was a sell of the selling point right there.
That was a major selling point.
Yeah.
So when you see the purple line cross the line, you get a good opportunity also. So when you see that purple line cross the red line before it shot up.
Okay. But like you said, you'll show me because I see you said you have to wait for the candle to completely close and finish the trend before I make.
Yeah. And we would have already been in the sell because remember earlier we were supposed to, but right now we still have to set up the indicators.
Right.
But the indicators are already showing a sell for us. It's already showing a sell.
And now, right now, this is gold right now.
Yeah, this is gold right now.
Okay. Okay. And like I said, this works with everything, Forex, everything. Okay.
The stock market, indexes, NAS 100. So it's a game changer. It doesn't work on smaller things like penny stocks. It won't work on or like stuff like that. But if it's a big thing like gold, Dow, NAS, maybe Apple stock and stuff, and if it's big like that, then it will work.
Okay.
So so right now the price is finally crossing that. What were you gonna say?
But I was gonna say, but now, in order for me, because like I said, I'm on Henkel Trade, so I have to see what's going on here at Trading View, and then
enter your trade on Henkel Trade. So I want to show you how to enter a trade on Henkel Trade.
Okay. Now, is that gonna like? Does it have to be precise, or I'll have like a few minutes to go from?
Yeah. You'll have a few minutes because each of these candles take 5 minutes. So you'll have 5 minutes to enter it. You'll have a lot of time.
Okay.
So, and the way we trade, and the reason why I set it up to indicate like this because you want to trade bar by bar. Like, let's say you took a sell right here. You took a sell in a red candle, and the price is going down, and then you see 2 green candles in a row, or like three green candles in a row. You can exit your sell now because you're like, all right, the bulls are coming in because you see solid candles. You know what I'm saying? It'll give you warnings to exit. So I'm gonna try to exit trades also, which is very important. You can even see it already on the screen, but I'm gonna teach. I'm gonna share my screen in a second too, just to go farther. All right, so this indicator is set up. Now we need to go to the next indicator. So go back to your indicators. So that's the EMA. Is there any questions on the EMA on that indicator?
For this one, nope. Not nothing that comes to mind right now.
And it's just trend tracking. It helps you keep track of the trend. And what price is able to do with it is, can the bulls take over or the bears take over? Once you know the trend, you can use the signal bars to enter on that trend.
Yeah, that's what I'm gonna, like I said, once we go to Henko trade, and like you said, I gotta wait for it to finish up or down. That's gonna be key.
And we'll have a live scenario too. So now go back to the indicators again, and we're gonna add the next indicator on top of this.
That's right here, right? No.
Also go to your EMA indicator actually, and hit settings. Go down.
Right here.
Now go down. Down one more. No, up. Yeah. Now hit that settings button right there to the right. All right. So the settings you want for this, scroll down on your input list. Scroll down. You gotta scroll with the side there. Now you see where it says fixed time frame EMA right there, fixed TF EMA, up, right there to the left.
EMA 4, EMA 5. Oh, okay.
All right. Click that button. Check that checkbox. No, go to the checkbox first.
Okay.
Check that. And then resolution 1 hour.
Resolution for 1 hour.
And then where it says defaults, click on the defaults button.
Default. Okay. So and LEN says 20. That's fine.
Yeah, that's perfect. And
okay.
It says default. Click that.
Save as default.
Yeah, save as default. All right, everything perfect.
It just hit okay.
Yeah, hit okay. So now that price line is the stronger trend line right there. That's the strongest trend line. So this is how you know we're still in the downtrend. That's the strongest trend line. Once it breaks above that and it's able to hold above that, then it's all buys from there. Okay. Now your EMA is set up just like how I use mine. Now the next step, we want to go to indicators and set up the next indicator for the trading times. It's going to tell you your best trading times.
Okay. This one right here again, indicator.
Yep. Hit that. And you see trading sessions.
Trading. All
right, click that one. Now this indicator is going to give you the best time to take trades. So hit the X button. And we're going to get into this one. So you see the green, gray, and blue boxes on the screen?
I see the green one. Oh yeah, gray. And blue. Yes.
So those represent the best times to trade. That's when the biggest banks in the world are open and they start moving the market. So the green one is the London banks. Those are the London banks, top banks in London. They open up there and price makes a big move there. The gray one is
I remember before you were giving me the Asian, the different colors. Like I have them written down in my notebook.
Now this indicator does it does it automatically, and you'll be able to trade off of it. And then the gray box is for New York sessions.
Okay. And now, right now, the Asian is what? The green or the
Asia is blue.
The blue one right here.
Yeah, so we're in Asia right now.
We're in Asia right now. Okay.
And then you see that orange line, the dotted line?
The orange dotted line right here.
So that orange line, it represents the previous week high. So
previous week high. Okay.
For last week,
right now, this is the price right now, presently.
The price is a little bit below last week's high. Okay. And that's important to know because that's where a lot of liquidity is in the market. So that's why that line is there. And then the yellow line shows the previous day high. The yellow line.
Okay.
So right now the price is above yesterday's high. I mean yesterday's low. And below last week's high. So it's just important.
Last week's high. And that was yesterday's low or high? The yellow.
The yellow is yesterday's low.
It's low. So right now we're lower than it.
Right now we're above yesterday's low, but we just got liquidity. So those lines are important because they represent support and resistance. Those are your support and resistance lines. Basically, you need that because you want to be able to know where price is headed towards. Price, it's like a magnet, it goes to support and resistance. The reason it does that is because a lot of traders place orders, market orders at those prices, like JP Morgan, for example. They don't trade using these charts. The way they trade is they'll say, all right, when gold goes to 2,100, put all my sells in right there. Or take me out of gold at 2050. Take me out of gold in 5 points. Like you ever watch the old Wall Street movie?
Oh, they just set a number.
Yeah, they say their price number, and then that's where they get out in and out. And those numbers are based off of how the market moved and according to the other banks. So they're like, all right, London closed at 2074. All right, buy me orders up to 2075. They trade against each other or sometimes work together. It's how the market flows. So right now, Asia looks like it's going up to get liquidity from New York. It already grabbed some liquidity actually. So Asia looks like it's trying to get liquidity from New York, and the price wasn't able to break below the red line. Remember we talked about the red line. Since price couldn't go below that red line, it keeps trying. It might keep trying, but it's looking like it's gonna bounce up right now. So we'll wait for more.
Now, what line are you looking at right now that's telling you is this the thick red line right here?
That thick red line. If price can't get below it, it's gonna try to.
That's what you're following right now.
Yes.
Okay.
So if price can't get below it, that's a sign that we're probably gonna go above it. And I'm gonna show you from my screen exactly what I mean. So I'm gonna go into. I want to show you right here. So we got the red line right here, and right here, two arrows. The price tried to get above the red line, but it rejected it 2 times. It just couldn't get it. So then it bounced off it and shot down. Because all the bots, like some of the banks use bots now. The bots know the
I see that. I see a lot of those like online. People to use the bots.
Yeah, the online bots are okay, but the best bots like one of the top trading companies in the world, they use all bots and they have billions of dollars and maybe close to $1 trillion. They have a lot of money. So they use bots and they manage their clients' money with bots. Like if you go to Wall Street now, there's not traders running across the floor screaming prices anymore. They have bots doing it and AI and stuff. So the AI, they didn't understand the average prices. They know all of this stuff. So they're trading off of, is price above or below average? Is it a fair price? This questions that the bots are answering. And if price is not able to get above average, then it will sell it until it gets a better price to buy at.
So would you recommend listening to a bot or no?
I recommend these indicators, they trade off the bot. So what you want to do is you want to use the knowledge and you want to use it to your advantage. So if you're seeing that the bots are about to start going down, you want to jump in with the bots because they have all the money. They have the billions of dollars. They're gonna push the market, and you just want to get along for the ride. So these red and green candles signify the bots movement.
Okay.
That's how you know the bots are moving. Like, so you see when green, the bots try to push the price above the red line. They couldn't do it. Yeah, it fell once. They even tried here. They fell, they tried, they fell, they tried, they fell the 3rd time. When something fell 3 times in trading, normally it goes the other way. So then now you see a red candle here, you enter your sell right here, and you would have took your sell right here. You can put your stop loss at the red line, or you can put your stop loss right above the candle, right above the red candle. And you can take a 3-to-1 trade. It even went to 5-to-1. Like you could have 5 extra money, 4x. But just take your 3x. of your risk. So you risk $100 to make 300. You get out. So 3 to 1 is right here. You get in. It fell 3 times. You get in. Price falls. You're out. Done trading in 15 to 20 minutes. This is most of my trading days now. I'm done really quick. I look at the indicators already track everything throughout the day for me. So I just come in, I look, I see what's price trying to do. Oh, it can't break below, or it can't, it's bouncing off this, it's bouncing to the upside, it's starting to uptrend, or it's continuing the downtrend. I wait for the candle color and depending on the trend, and I jump in. And I'm done trading 20 minutes. I don't have to watch the charts all day anymore. So I'm really enjoying it. And I'm gonna
And
keep
once you set your trade, you set the trade and that's it.
Yeah, I set my trade. I set my stop loss. So I'm going to teach you this when you put the trade in right now. You set your stop loss. You set your take profit, and then that's it. You don't even have to watch it. You just let it go.
Right.
Win or lose. Yeah, win or lose, it doesn't matter because over 10 trades, you're going to hit 8 out of 10, and you're not risking your whole account on one trade. So yeah, so the math works out over time, and I'll show you the equity curve exactly what I mean. Like I'll go through that, explain that again.
Okay, yeah, I remember you showed me that. Yes, that made total sense.
Yeah. So then when you're trading at 80%, I'll pull it up one more time. All right, so we're right here in the simulator, our equity curve simulator. I'll start with 200 in there. And when you trade at 80%, and you're going for 3 to 1 trades, you can go for 4 to 1 and all that, but you're going for 3 to 1 trades. You take, let's say you do 1 trade every day for a month. You do 30 trades. And your risk per trade, you only risk 10% of your account per trade. That's what I would recommend. I recommend 1 to 3%, but you can with 80% accuracy, you can risk 10% of your account. So when you're risking 10%,
10%, okay.
You can turn that right here in 1 month. It's went to 70K. It's kept 10% risk off of 80% accuracy.
70K from $200.
$200.
Winning at 80%.
Yeah, winning at 80%, taking 1 trade a day.
One trade a day.
The reason most traders are able to treat this because they'll hit 5 trades in a row and then they'll start risking 50% of their account. You know what I'm saying? They'll start risking more. Because look in the beginning of this equity right here, it doesn't look like it's gaining much. It's just kind of going sideways. So they get bored around this point and they're never able to compound their account. But now let's say you're risking 5%. You don't want to risk 10%. It's too risky. You do 5% risk. That $200 went to 3K, 4K. It never down draws. Now let's say you go 70%. Let's say you put a margin for error. Like what if it goes 70%? That $200 still went to $1,600. Just 1 trade a day, 15-20 minute trade a day.
And that's for the month?
1 trade a day.
Okay, 1,600 from 200. Okay.
1 trade a day. Went to 3K over here. Because depending when you win or lose, it's gonna go to different heights. You don't know which of the trades are gonna be your losers. That's why you can never over risk. Because like Elon Musk can come and like, I just want to put $1 billion in gold one day, and then they can, anything can happen. So you want to have that margin for error. So you can't. You gotta say, I don't know what trade is gonna win or lose. I'm just gonna stick to this strategy. Now you got your risk amount. You know how much you're risking per trade, and you got your indicator. So I would start with 5%, comfortable with it, and then increase it to 6-7%.
But start off at 5%.
Yeah. Like I only risk 1% per trade, but I'm on a bigger account. And I'm able to make thousands a day just risking like that. So you don't have to risk much, and then they have the funded accounts too. So you don't really have to risk much nowadays.
Right. So I'm hoping with the indicators once I get to know how to use it, I'll be able to get a funded account. Yep. Originally, you had emailed me a couple of funded accounts, I think, in the Telegram that you use. So yeah, once I get the indicators,
get it down pat, get the wheel rolling. Every day you implement the strategy. It's going to seem really simple and boring. You're going to hit that one trade, and you might want to trade again, or you might want to over trade. I wouldn't recommend it. You can catch 3 trades a day per session. So you can catch a trade in the Asian session, one in London, one in New York, but you might be sleeping during one of those sessions. So realistically, you might catch Asia and then New York. And 2 trades a day, you're done.
That's all you do? Just one trade a day?
Yeah, I do 1 trade a day.
That's it.
Wake up in the morning in New York. I see what New York is doing. All right, they fell below here. They came back. They broke above. This not a good New York session. This is actually a trading range, but I would have caught this move right here.
Okay. Well, I can't see your screen. I just see the simulator.
Going back, so I would have told you how I would have traded in New York right here, and that's why, like, in the Discord, like, I post that 1 trade a day. Like, that's literally my trade. Just take that one, I'm done. Because you don't need to take. You can make all your money in 1 trade. 15, 20 minutes, work is done. You can see
that would be great. You know what I mean?
Even when we first started, remember when I was like, all right, we would take a short right here. If we would have put that short in and let price fall from just us first starting. When we just had the signal bar indicator, we would have just did that, put our stop loss here, and went for a 3-to-1 trade. We'll be almost at take profit.
Okay, yeah. See, I want to see how it works on the Henko trade.
Yeah, like it's crazy. Like, we're gonna watch the price. We're gonna watch the trade hit while we're live. I was gonna tell you just to put in the trade, but then I never explained the indicators and stuff, so I didn't. I wanted to properly do it. Right. But we'll still be able to find a trade opportunity. There's always an opportunity in this market. It's infinite opportunities in this market. So and 24/7 they always happen.
Right. That's the one thing about day trading. That's one of the things that caught my interest. That you could make money pretty much around the clock. Other than Saturday and Sunday afternoon.
Yeah, exactly. Take those days off because you won't even need to trade those days.
You could make money or lose money.
Yeah, no, that's important. You said that your job as a trader is to make money and lose money. However, your losses have to be smaller than your wins. That's it. Like, I can show you an example right now. I'll pull back up this I'll pull back up the simulation for 1 second because all right. So let's say I'm only 20% accurate. I'm just a 20% accurate trader. I'm not even a good trader. I'm the worst. I'm only 20% accurate, right?
I was gonna say, that's not good.
Not good. But however, with the math of trading, if I go for 10-to-1 trades, if every trade I try to hit 10-to-1 risk reward trade and I risk my 5%, I probably have to risk 3%. I risk 3% per trade a month. After a month, I'm still making $500. This month I broke even, so I have to go less. I'll have to go for 20-to-1 trades.
Even at 20%.
Yeah. So let's say I go for 20-to-1 trades. At 20%, I'm still making profit. I can turn that $200 to $4K in a month. Some months are gonna be better than others, but I would never go. Oh, that one I broke even on. So I'll have to either risk less, so I have to risk 1%. And money always goes up. It's not as pretty. Even at 20%, you can make money. It's about having the right, because your job as a trader is to be able to take wins and losses and be able to do it without messing up the equity curve over time. As most traders think trade by trade, the top traders, they think over a series of trades. They think over this month, over this year, I'm going to be this profitable based on this equity curve numbers.
Okay.
And that right there is a major shift that helped me. once I start thinking over a series of trades, like all right, over the next 20 trades, over the next 30 trades, I'm gonna aim to be 50% accurate, 60% accurate. Now I got it up to 80%, 90% accurate and stuff. So I'm able to make a lot more in a faster period of time. But you can be 20% accurate as long as you're going for bigger trades. So so this is a 20% accurate. And then there's a trader who like makes billions of dollars and he's only right 20% of the time.
And makes billions?
Yeah. He goes for 100-to-1 trades.
Oh, okay.
He has his losses and stuff, but when he hits him out the park. He's a billionaire trade.
Right.
And I'll show you what 100-to-1 trade. So I'll go back into the charts right now to show you what that looks like.
Wow.
Nah, yeah.
So it's a marathon, not a sprint.
Yeah. Trading is no, that's the best way to put it. Like Nipsey said, trade is infinite opportunity. So right here, this is a 100-to-1 trade. Let's say I saw this red candle here. I saw an uptrend. I saw a price going to a trading range, kind of dip below the red line, come back up, and I took like a trade right here. Like I saw a red candle up here. I took this. Even this is not 100-to-1. This is a 20-to-1 trade. You could have just called this whole 20-to-1 trade. Because the 5-minute chart. I'll have to go to like a bigger chart for 100-to-1. Or I'll have to just,
because I showed some of the trades that you showed on the Telegram with the gold. Those were big wins.
Yeah, those are giant, the big ones. Yeah. So, and that's all the same indicator. The way you catch the bigger trades and the bigger moves is, I'll have this. This is how my screen normally looks. I have the smaller time frame chart open, the 5-minute chart, and then I'll also be watching the week chart and the day chart. And sometimes I switch to like the month chart.
So you have it broken down like on your computer, the 3 different, you have the indicators and the
So I use the same indicators, 4 indicators, and I watch it on different time frames. So on here, I see an uptrend on the month. I'm like, oh, it's an uptrend, and we just had a green month, so price is probably gonna push up more this month. So then I set up my buy, that buy I called in the Telegram. You saw the big one. Set it up for the new month. December came in, price shot up, and that's off the same indicator because it works on every time frame. So you can catch, it's great. And on the big time frame, you catch the big moves. Like, yeah, I'm excited for this new video series to drop. I break down all the indicators. Like,
I can't wait. I can't wait myself, even from the last time we spoke. Because the first time, you didn't have the indicators.
I had to try to teach 5 years of knowledge and break it down. And it's a lot of knowledge. Now the indicators make it so simple. Like,
right.